This week is about positioning. I took 4 trades, 3 of them were losses and one of them was a winner at half an hour. None of them were stupid trades. They all had defendable theses behind them. So it was the right call. Price action was just a bit choppy and I still took the trade when I probably shouldn't have, and I paid for it. So let's hop on the chart. This week was dominated by the Middle Eastern war again and the energy shock. The Strait of Hormuz still remains effectively closed. That lens was underneath basically every print this week. We had UK labour market data, CPI data, PMIs globally. So essentially the war is a stagflationary shock hitting Europe and services are getting hammered. Manufacturing is still quite resilient though. The macro was quite clear, especially after Wednesday and going into the latter half of the week. Just because the macro is clear doesn't mean every entry on the chart is going to be clean. The first and the worst trade was this UK 100 long. So what I had was this 4-hour fair value gap here, and then these two equal lows get swept, so we trade into it and we get this candle rejecting away bullishly. So it's a decent close there considering the conditions, and I was expecting this gap to get filled and then eventually go through this high, so I had my take profit up here. So after entering, we had this doji candle, and then going into the New York session, it absolutely melted straight through the stop loss as well. So I probably shouldn't have taken this trade. The bias wasn't wrong, but just the conditions were too low probability. It's like completely consolidated. It was a very hard read, and I'm playing off this very small gap here, which could just be noise. This chart example is not the cleanest setup, and that's why I would think twice about if I was to take this trade again. The next setup was these AUDJPY longs based off the carry trade thesis that I had last week. Australian dollar is the higher yielder and Japanese yen has the lower interest rate. So the thesis was right. AUDJPY did go higher, but I got stopped out on the trade. It ran through my stop loss, wicked away, continued to retrace a bit, and then going after the weekend, going into the next week is when it really started to pick up. You can see that would have been a take profit there. This is a fairly clean example though. Price action is quite choppy. We're trading in this range right here, but there's a clear gap. First of all, you get this sweep, reject away, and then retracing deeper, you get another sweep, and then I start to see these bullish closes away, which is quite a good indication. Took the trade. I was still fairly confident. We're at this point sitting in break even here. I'm still quite confident. I mean, I don't expect these lows to get ran through, but they do. And it's almost a seek and destroy profile. Like, look how this low gets just taken, and then it goes to take the high, and then goes to take the low again, and then goes to take the high. So I even added a few pips onto my stop loss, basically underneath this low here, just as a protection against a chop, but it wasn't quite enough. And this was Thursday, which was also global PMI day. Australian dollar is a risk on currency. Yeah, so since the PMI hit the Eurozone services quite hard, it was risk off for them, and being positioned alongside this carry trade wasn't a good idea because they cut both ways as Australian dollar weakens and JPY strengthens. So if I took this trade, let's say on a Monday, it would have been better, or if I took it on a Friday, it would have been better. On Thursday, it was just positioned wrongly with the news, and I should have thought about that. Now, the next setup was this DAX short. Technically, this was one of the most cleanest trades of this week, Every time I would say lower, and it got stopped out very fast. I don't mind this because when I lose trades, I like to lose them quickly, just like this one, because if you hold on to a trade and you're slowly bleeding out over time, there's opportunity cost where you cannot take any other positions if you're already maxed out on risk. So it's always better to lose fast and know you're wrong fast, and you can move on to the next setup or move on to a continuation trade if it's retracing further. Macro wise, it was pretty clear for this week. German growth forecasts were being slashed and Eurozone, the services were getting hammered, so it was always lower, and you see there was a good setup here off this gap, and then I took this one. There's a gap on the higher time frame, and then we swept these highs here, and then getting really strong close, like cutting through the fair value gap, and that was my entry there. You see the Monday, the Tuesday, the Wednesday, the move was already pretty clear. I was coming in a bit late on the Friday, and it wasn't a fresh leg lower for the move. Again, still pretty choppy here. High swept, low swept, high swept, and yeah. The trade window was kind of already closed, but I still took the Friday setup. I was confident when I went into it based off my technical analysis, and I should have considered that as well. Now, moving on to the UK 100 shorts, the final setup of the week. So we had this fair value gap here, and then price swept this high and this high into the fair value gap. Then we got slight wick away, and we got a bearish close, not the strongest. But going into the weekend, you know, my decision was to exit the trade early, like I did last week. Basically, just the war is still ongoing, so there's real risk to hold trade over the weekend. The news was shaping up to look like lower indices across the board, but I just didn't want to risk it. Playing it safe here. Holding that trade through the week, you can see there's the TP based off. There's filling the gap on the higher time frame. Now this would have erased most of the week's losses, but I exited the trade and I only took half an hour on it. Half an hour is better than another loss, but I have no other wisdom to drop on this trade. Just it is what it is, and that's what happened. Looking at the 4 trades together, it wasn't really an analytical failure. The thesis was mostly correct. Failure was the choppy conditions. Consolidation, they're just low probability conditions for trades, and it's very hard to get a read on not the direction but the best place to position yourself. And I still took the trade. So trade 1 was hard to read, consolidated, should have passed that. Trade 2, choppy entry, and then taking the trade into a known risk off calendar event. Trade 3 was the best technical setup, but the broader price action was choppy and the macro move had already been playing out. Trade 4, conditions mostly and the thesis lined up, but risk management led me to close early. And now I'm not going to make any adjustments straight away. I don't want to overfit for this week, but I do need to consider whether consolidate conditions, and I cannot identify these low probability conditions. I just need to question whether making the trade is the right decision here, as basically 3 out of 4 of them I probably should have passed. This year has been slightly difficult with trading with all the disruption geopolitically, a lot of consolidated and choppy price action across the board. Yeah, I've not seen chop this bad in all the years I've done of backtesting, so it's been it's quite a difficult place to start trading in. If you take a look at like Darwin X, a lot of the top traders on there are in similar positions. A lot of break evens overall, and maybe some small losses for this period. So when you're eager, it's difficult to stay out of the entries, especially when you don't have an account built up. There's a little bit of pressure that you put on yourself to force these trades and to try to make profit, but it's obviously not the right conditions, and it's something that needs to be reconsidered if you want longevity as a consistently profitable trader. It was a red week. Net result is -2.5R, and for next week's review we'll see whether I survived the chop or not.